Okay, so on Tuesday's class, we kind of began Chapter 3 of the Institutions unit, looking at the federal bureaucracies. We looked at who were the bureaucrats, what were bureaucracies, how you get into it, and various other questions. But today we're going to kind of dig a little bit deeper on the major bureaucratic agencies themselves, and kind of look at how they fit into the checks and balances systems and the workings of our federal government. So the first question that we're going to look at is quite simply, what are the four types of bureaucratic agencies? Okay, and so the first one are the biggies, right? These are the 15 cabinet departments. Each of these cabinet departments, they're the largest, most important of the bureaucratic agencies, and they're each headed by a secretary. Secretary of State, Secretary of Defense, Secretary of Housing and Urban Development, Secretary of Health and Human Services, Secretary of Labor, Secretary of Treasury, Secretary of Agriculture. They're all headed by a secretary except the Attorney General, who is the head of the Department of Justice. And so the secretary of each of these cabinet departments does not run this massive bureaucratic agency by themselves. They are supported by undersecretaries, deputy secretaries, who run really kind of like specific sectors of their bureaus, right, or specific like parts of their agency. So within, housing and urban development, um, you would have the WIC program, right? Or maybe that's within Health and Human Services. Within Health and Human Services, you would have the USDA, right? And so these are heads of those smaller bureaus. But the cabinet departments, are the sexy ones. They're the big ones. They're the ones that everyone remembers. But really, much greater in number and maybe not quite as important, but still incredibly important in the scheme of government, are something called the independent regulatory commissions. These are those alphabet soup agencies within government. They are responsible for making the rules and basically protecting the public interest, right? And so, for example, like say the EPA, the Environmental Protection Agency, their job is to protect the public interest in various sectors of the economy. And they were created as a result of the Gibbons v. Ogden case that gave the Commerce Clause and the federal government the right to regulate interstate commerce. And so, in regulating interstate commerce, the federal government has set up all these different agencies to basically protect the public interest, make sure that things are happening the way they're supposed to, that no one's getting screwed. Um, some of the biggies, the ones that the College Board actually tends to focus on, are the Federal Reserve Board. The Federal Reserve has been really, really instrumental over the last year, given the COVID um, crisis, because they're the ones who set interest rates. They're the ones who basically have a huge hand in regulating the economy. If the economy starts to slow down or sputter, they can pull a couple different levers and do a couple different things, mainly lowering interest rates to make borrowing easier, to kind of accelerate the economy, to speed it up. They're the ones that if the economy gets too hot, right, and it starts to overheat, and inflation becomes or hyperinflation becomes a problem, they can slow it down. They can increase interest rates to make it more expensive to borrow money, which they are the ones that basically are the air traffic controllers of the economy. They regulate banks. They can inject more money. They oversee the mints. Um, they are really, really, really specialized economists tasked with protecting our nation's economy. They also tend to kind of fixate on the FCC, the Federal Communications Commission. We've talked about them before with regards to the media unit, but the FCC, they regulate programming for all things like media related or broadcasting related. They radio, television. Their power has greatly increased in the last 20 years with the birth of the internet because the FCC regulates that too. And they regulate it for the public interest because outside of cable, right, like all of the television channels on your television are kind of using public airwaves. Who controls the air and the airwaves around us? Well, the American people does. And so the FCC, will rent out frequencies like 98.1 or 103.9 or whatever it is, or Channel 5, for example. They give these frequencies out to broadcasting companies to use them, but they put like stipulations. Their job is to regulate that to make sure the public interest is served. We also see the Federal Trade Commission. They're the ones who regulate business practices, making sure that businesses are playing fair and not cheating to get competitive advantages, make sure that things are relatively equal. The Securities and Exchange Commission, they're the ones who regulates the stock market. Um, they've had some monumental failures over the last couple decades, or 10 years especially, for kind of falling asleep at the wheel and getting a little bit too cozy with the banks and the stock markets themselves. But we'll digress there. Um, and these independent regulatory commissions, their seats get filled by the president who appoints someone to an empty seat. And then, just like every other major bureaucratic appointment, their appointment is approved by the Senate, which is, again, a great example of a check and a balance. Now, one thing that makes independent regulatory commission appointments a little bit different is if I appoint a Secretary of Defense, and then the Secretary of Defense does something that I really, really don't like as the president, I can fire the Secretary of Defense. The Secretaries of Defense and the Secretary of the Cabinet departments, because they're advisors, they serve at the pleasure of the president. The heads or the people that sit on the independent regulatory commissions, they are not serving at the pleasure of the president. They are appointed by the president, but they have something called fixed terms, meaning they serve a certain amount of time, usually 6 years, and they can't be fired. So once they're approved by the Senate, they're in for their 6 year term unless they retire. These fixed terms can make them a little less politically sensitive, right? Because once you're in, you don't have to worry as much about being fired by the president. Also, their 6 year terms oftentimes have them kind of carrying over into a different administration. So the people that Trump appointed are still there under the Biden administration, right? And so they're going to continue to kind of execute that, and it doesn't matter whether Biden doesn't like them. He can't fire the heads or the people on independent regulatory commissions. They are a little bit politically insulated. Now, the interest groups often have a kind of a role to play with the bureaucracy too, because we think about interest groups as, creating PACs or working for the election of candidates or, putting forth specialized information to members of Congress. And while that is a dominant role that they play in American democracy, they do have a role to play in the bureaucracy. Interest groups don't just lobby members of Congress, um, they also lobby people that sit on the Independent Regulatory Commission. So, for example, you might remember a couple years ago there was all that debate over net neutrality, right? Where net neutrality was coming up before the FCC, and it was basically a provision that would allow internet service providers the ability to regulate the speed for certain websites or certain services. So, like for example, Comcast could charge more to give you higher speed and sell a slower plan that would kind of slow your internet down. Or if you were streaming too much Netflix, they could slow your internet down because you're sucking up too much bandwidth. That's the most optimistic way they sold it, but the kind of the fear amongst a lot of people as they were reading the law is it would allow internet service providers to not just slow the internet down to customers or speed it up, but actually slow certain websites down. And the worry here is, let's say, for example, Amazon ever bought CenturyLink, and Amazon said, okay, we want to make Amazon.com a really fast website, but we want to make all of our competitors like Walmart.com, right, or whatever else, we want to make them so slow and annoying that people don't even want to go to them. That basically the internet ceases to become a free and fair market and becomes kind of able to be manipulated by internet service providers like Comcast or CenturyLink, who might have different motivations. They might say, we don't want um, Google to run fast because we started our own search engine. And so that's the fear. It became a heavily contested um, thing, and Ajit Pai, the head of the FCC, ended up voting to end net neutrality, to allow internet service providers to do this. Um, you can bet that Ajit Pai was heavily lobbied by interest groups representing the interests of service providers like CenturyLink and Comcast, right, Xfinity, that they would have been very lobbied and kind of wined and dined and pressured, because interest groups don't just work with Congress, they also work with the bureaucracies. This has gotten controversial at times because what we have seen is a growth in closeness between the regulators, the independent regulatory commissions, and the kind of people that they regulate. So, for example, the SEC, the Securities and Exchange Commission, came under fire after the Great Recession of 2009, um, because some of the members of the SEC used to work at the banks that they were then asked to regulate. So they were like heads of Wells Fargo, or heads of, Citibank, or heads of JP Morgan Chase, who then got a seat on the SEC, and kind of let them get away with stuff. Didn't really regulate them that hard. Didn't check them that much. And so then when those banks sort of explode and need bailing out, there's a lot of people crying, be like, hey, this closeness, this buddy buddy between the people that's charged with regulating and those that are who they're regulating is not right. This also happened with the FAA, where FAA regulators were coming from, major airline providers, like, heads of Southwest Airlines or Delta or United Airlines, were getting seats on the Federal Aviation Administration. And then what happened was the Boeing 737 Dreamliner jet that crashed 3 times and killed, 800 people. They came to find out that the FAA really didn't do its job of closely regulating the of Boeing and the production of these things, that they let them get away with some things and cut some corners. And a lot of observers are saying, look, you guys are too close. If you're going to make sure that this segment of the economy is working and protecting the public interest, then you can't be best friends with them. Like, there needs to be a little bit of an adversarial relationship where you're kind of keeping them in check. Um, yeah, okay. Another one's Bureau of Ocean Energy Management came under fire after the oil spill in the Gulf of Mexico, that they weren't closely monitoring the underwater drilling lines of Exxon, or it was BP. It was BP in the Gulf of Mexico, and then when it blew up, they said, "Well, it's because you guys are too close." So this has been a major criticism of the independent regulatory commissions lately, and is trying to be cleaned up. And I think Biden administration is kind of trying to maintain that idea that we're actually gonna have the FAA truly regulate airlines. We're actually gonna have the SEC truly regulate the stock market, not just let them get away with whatever they want. The next type that we're gonna look at is a government corporation. Now, this is an interesting one because government corporations, or corporations in general, let's say corporations, have a job to do. Corporations' task is to make money, to be profitable. Well, this oftentimes seems out of bounds or out of line with the goal of the government, which is not necessarily to profit, but to ensure that citizens' needs are met, and then that, like, our society works. Now, there aren't a ton of government corporations, but a government corporation is essentially a government run organization that provides a service that could, in theory, be delivered by the private sector. And so when you look on the left hand side of this slide, you can see 3 examples of that. Right? Amtrak could be done by a private train operator. The mail, we have UPS and FedEx and DHL, right? But we have the US Postal Service too. And conservatives oftentimes say, well, we should privatize. The government shouldn't be involved in the economy. That should be private domain and business. Now, the the pushback for this is that these government corporations are typically providing a service that wouldn't be able to be carried forth efficiently or profitably by a private organization. And I'll explain more in episode or the next episode of the lecture.